Welcome to the Transparent FX Academy. I'm Nick and I'm a top order trading view with over 190k reputation points. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong historical monthly demand and support zone. From here, all these previous rejections to the upside were created every single time that the market tested this area. It rejected it to the upside quite aggressively. And what we had in all this period, spanning many years, there's only one time in which the market managed to break below that zone and then break back above, immediately invalidating the breakout to the downside and making this push to the downside actually be a fake breakout. And immediately after that, the market continued in multiple occasions respecting this area as demand and support. And right now we're getting again a test of the exact same level, a strong rejection to the upside. And in a situation like this, more bullish price action could be expected away from the level, as already happened in the past when the market was testing this exact same level. This push to the upside is also fueled by strong institutional buying, and we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis for EURUSD. So essentially what institutions are doing in the market. And we will speak about that in just a few seconds. But for now, let's keep in mind all of this and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. We had a perfect inversion of trend from a weekly bearish market to a weekly bullish market. The market went from the creation of weekly lower lows and lower highs. We just then had the double bottom created exactly this zone, and the market inverted to the creation of weekly higher highs and higher lows. So from a weekly standpoint, everything looks quite bullish and more bullish price action could be expected away from this level. Now, let's also keep in mind that this is a new weekly higher high. So the next logical step would be to see first a correction, a new higher low, and then a new weekly higher high. Because if the uptrend is to continue, as we know, an uptrend is created by a series of impulses and corrections, which print higher highs and higher lows. So the natural movement of the market. Now let's keep also all of this in mind and drop down on the daily time frame. From a daily perspective, the situation is quite clear. I spoke about EURUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which I was expecting this rejection to the upside. And in fact, that is exactly what the market gave us. Then again, when the market corrected to this zone, I made a full breakdown explaining all the reasons for which I was expecting this impulse. And after this impulse to the upside and correction, I explained all the reasons for which from here I was expecting institutional buying and a rejection to the upside. And again, that is exactly what the market just gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. But at the moment, what do we have? Well, from a daily perspective, we just had a very strong impulse to the upside. The next logical step would be first a correction and then the continuation higher. But before we go into more details from a technical perspective here on the daily, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, if we're looking at the data for the euro, we have to keep in mind that we are already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from 74.4k net positions all the way up to 111k net positions. So we had a quite massive increase in net positions from an institutional perspective, In fact, institutions have currently reached a total long exposure of 223k longs compared to only 112k shorts. So they essentially have double the amount of longs compared to shorts on EURUSD, adding another 2,980 longs with the last report and closing another 6,602 shorts. So clearly, institutions have increased their positioning to the long side of EURUSD, expecting more bullish price action. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which is also linked in the description, so you never miss new updates. Now, back to the analysis. So from a daily perspective, the market is currently above the previous daily high. This is the previous level of resistance. Then the market broke it to the upside. That previous resistance became support here. Now, if we have an impulse and we want to measure the correction, we have to take a Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.32 and 50% retracements lining up exactly at the previous resistance turned support. This means that we actually have confluence of support at this level because we have the Fibonacci retracement zones and the previous daily resistance turned support, both lining up in the exact same area of price. And when you have multiple confluences of support at the exact same level, what you would expect at that point is increased institutional buying. So if the market will correct to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me.
Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.